Welcome to today's deep dive. It is February 2026, and if you're watching gold right now, well,
It is tense.
very tense. XAU to USD is hovering right at about $4,986, which is tantalizingly close to that massive $5,000 psychological mark.
Really feels like the chart is just sort of holding its breath right now.
Yeah, and our mission today is to break down a technical framework that puts gold in an absolute decision zone. We're pulling from sources that use a multi-time frame strategy here, so zooming out to the 4-hour chart for the macro trend.
Then right down into the 5-minute chart for the immediate action.
Right. We want to see if this cautiously bullish bias holds or if a reversal is actually coming.
Exactly. And to start, we have to look at the big picture. So though on the 4-hour and 1-hour chart,
The primary trend is clearly bullish.
it is. I mean, it rallied hard from those 4,840 lows. We are seeing classic higher highs and higher lows.
And it is trading above all the major moving averages.
Yeah, which suggests really strong support. Our sources compare it to a rising tide. Despite the small waves, the overall direction is just undeniably up.
But here is where the conflict comes in. Because you zoom down into the 15-minute chart, and suddenly there are some microstructure warnings.
Big warnings. We are seeing a real bearish risk there with a classic double top formation right at $5,021.
A reversal pattern.
Yeah, the price basically hit a ceiling it just could not break twice. And if you squeeze down to the 5-minute chart, it gets even more intense.
The Bollinger Band squeeze.
Right. Volatility is totally dropped off. The range is incredibly tight.
Which technically signals that a violent breakout is imminent.
It is a coiled spring.
Huh.
Right now, we are sitting in this consolidation box between 4,980 and 4,990.
The sources are explicitly calling this a no-trade zone, which is interesting because for the active traders listening, you might think a volatility squeeze is exactly where you want to position yourself before the pop.
Well, absolutely.
So why sit on your hands?
Because in a squeeze this tight, right under a massive barrier like 5,009,
Yeah.
the market is just hunting for liquidity.
Right.
It will try to wick you out on both sides before the real move actually happens. Guessing the direction in that 4,980 to 4,990 range is just gambling.
So it is all about execution. You have to wait for the break.
You really do. Our sources are very clear on this. Wait for a confirmed candle close outside of that range.
Okay, so let us map out those scenarios for everyone. The bullish scenario first. If gold breaks above 4,990,
With volume confirmation, that is key.
right, then what is the target?
The immediate target is a retest of 5,005. And if it clears that, then we are back up challenging that major resistance at the 5,021 double top.
Okay, and the bearish scenario. Say it breaks below that 4,980 support cluster.
Then the bias shifts. That 4,980 line is where the bullish momentum is currently defending. If we lose that, targets drop down to 4,963 and then potentially 4,940.
Which brings us to risk management. There is a hard invalidation level here.
Yeah, that is the 4,960 mark.
Right, because if it drops below 4,960,
The bullish trend is officially broken. That higher low structure on the 4-hour chart is violated. But again, you have to wait for the candle close to confirm. Do not just guess.
So to summarize for you all listening, the long-term trend is up, but the short-term microstructure has created this really high-stakes waiting game.
It is cautiously bullish, but only as long as that 4,980 support holds.
Definitely. And it leaves you with a really fascinating question to think about. If gold is acting as this ultimate safe haven, but it is showing this level of coiled volatility right at 5,000,
Yeah.
what does that actually signal about the underlying anxiety in the broader fiat currency markets right now?
That is the multi-trillion-dollar question.
Something to mull over. Thanks for joining us on this deep dive.